2024 saw a very strong performance from the Indian capital markets, and particularly from a fundraising perspective. IPOs and QIPs led the charge for Indian companies to raise their monies from the primary markets. Indian companies raised rupees 1.4 trillion in 2024 as compared to rupees 588 billion in 2023. Several factors led to the performance of the Indian capital markets: the strong economic of the country, foreign inflows as a consequence of foreign investors looking for their China Plus One strategy, as well as greater retail participation in the domestic markets. Issuers from several sectors led the charge: financial services, tech, consumer, retail, renewable energy, all listed on the bourses this year. Tech firms made a comeback to the Indian bourses in 2024, with companies such as FirstCry and Swiggy completing their IPOs this year. The post-IPO price performance of such tech companies has also generally been good. MNCs with Indian operations have also looked at opportunities to list their Indian subsidiaries. The first one of the block this year was Hyundai Motors. Several others have lined up plans as well, including LG Electronics, which filed their papers earlier this month. Other MNCs with significant Indian operations are also looking at opportunities to list their Indian subsidiaries. Private equity exits also were at an all-time high in 2024 through the IPO route. Private equity found supportive valuations this year, which helped them make their exit through the IPO route. Overseas domicile structures for various tech companies are also looking to reverse flip back into India. The founders of such companies are looking at opportunities to list their Indian operations. These structures were put in place to take advantage of favorable valuations in the overseas markets, such as the US, and eventually list these structures on the US bourses. But given the valuations that are being commanded in the Indian capital markets, several founders have decided to reverse flip their structures back into India and list in India itself. We expect these trends to continue well into 2025. Indian listed companies are also not too far behind. Several Indian listed companies raised significant amounts of capital through the QIP route. Companies such as Vedanta, Varun Beverages, each raised $1 billion plus US dollars through the QIP route, and we expect this trend to continue in 2025 as well. The tailwinds of 2024 are strong and will push or propel the capital markets performance into 2025. We expect these sectors, tech, consumer, retail, financial services, to lead the charge. MNCs with Indian operations will continue to look for opportunities to list their Indian operations, and Indian founders of tech companies with overseas domicile structures will look to reverse flip their operations, their structures back into India and eventually list in India. We expect 2025 to have all the bells and whistles of 2024 and more.